This program is brought to you by the National Association of Insurance and Financial Advisors, promoting political advocacy, education, and the ethical conduct of its members nationwide.
Hello, welcome to the latest edition of NAIFA's Programs in a Box. My name is Tye Elliott. I'm the Vice President of Broker Sales for Aflac, and we're going to talk today about the role of voluntary benefits in the new healthcare landscape. There's a path being created towards voluntary in the marketplace today. We're going to talk about its impact on employers and employees, the broker's role, and really the benefits role of the voluntary insurance products. Where are we on the role of healthcare reform? Healthcare reform has prompted a number of different things culturally for us that have really moved us towards voluntary products, some of which were traditionally a low priority in the discussion between human resources and the benefits broker, to really a prominent role in the overall strategy of the benefit package. There's a couple things that prompted this, and as I mentioned on many previous appearances, that before healthcare reform came along, you would be hard-pressed to find an article about critical illness, cancer insurance, or accidents in any voluntary benefits magazine or even SHRM or human resources publications. A lot of times discussions between consultants and companies that circled around voluntary benefits primarily talked about the standard dental, vision, life type products. And the critical illness, cancer, accident, hospital indemnity products were secondary. There was a perception in the marketplace that these programs were only vital to smaller companies that may not have had as robust programs. When healthcare reform came along, the trigger mechanism that I think culturally shifted the movement towards voluntary was really about the revenue model. As mandatory loss ratios were implemented, commissions on healthcare products were diminished, and brokers had to find a way to offset that loss of revenue. And this caused them to take a new look at some of the voluntary products because the revenues and commissions work differently. As they did, I think there was a realization of what a vital role this would play. Secondarily, under healthcare reform, there was a very clear cultural shift from the employer to the consumer on the true costs of healthcare, which included the expenses that had nothing to do with doctors or hospital bills. So I think it reintroduced the concept of voluntary products as we know them and created a huge opportunity in the marketplace. At the same time, it shook the very foundation of the traditional approach by the broker. And we're going to talk about that a little later as we get into what is the role of the broker now, as opposed to where it evolved to over several years, which is primarily the discussion between the health broker and the company was, what does the health plan look like this year? How do we make adjustments in it to cut costs or improve benefits, or both, hopefully? And then what percentage of this cost do we shift on to the end user, which is the consumer? The current realities of rising health insurance costs: average annual health insurance premiums for workers' contributions from 2003 to 2013 have gone up dramatically. In 2003, the average cost to the worker for annual health care premium was $2,400. $6,600 was shouldered by the employer for a total of $9,068 a year. In 2013, that cost went up to $4,500 for the employee, almost $12,000 for the employer, and a total of $16,000 for the average worker to get health care. Now, if you take in consideration, this is only the premium. It doesn't consider what gaps were also created. So as the premium increased, the gaps of coverage also increased. In fact, today, with so much coverage on the news, culturally, the average American is understanding that regardless of the outcome, they are going to shoulder more of the cost and have to make decisions in the future on what their health care is. To me, that's elevated the role of the broker and the importance of the broker to be that trusted advisor for the employer. Aflac Workforce's report that was just recently released showed that 50% of brokers are thinking about leaving the business. Again, this has created a huge void in opportunity because at the time when the demand is the highest for that trusted advisor, we have people leaving the business for various reasons, but two primary reasons. Number one, the revenue model again has shifted. For those that were able to adapt and expand their reach into voluntary benefits, they saw new opportunity, new ways to generate revenue, and ways to actually expand their block of business. Those that struggled making that transition saw a shrinking revenue stream and really the inability to advance their agency to a point where they could survive doing things the traditional way. So as they continue to leave the business, and we see a massive consolidation happening in our industry with larger firms buying smaller firms, the opportunity is getting bigger because the demand side of the market is growing. And the understanding of the value of voluntary benefits is increasing along with it. In light of these changes, companies are looking to offset financial pressure on the company and shift some of that pressure to the consumer or the employee. With that, 56% of companies that we surveyed have actually increased the amount of copayment by their employees into whatever health care design they've chosen. So the answer to offset this, to create a benefit environment that is viewed favorably by the employees, you have to look at different options. And what are other ways to offset costs other than just addressing the primary need, which is the cost of the doctor and the cost of the hospital and healthcare provider. So when bringing voluntary benefits into the picture, now you're looking at the overall financial health of an individual employee as they're going through a serious situation with an accident or illness. Now, in the Aflac Workforces report, we've cited several times that the average American right now, as costs are going up and realizing that their burden on the health care expense is going to increase and that their out-of-pocket expense will increase as this goes on, they're realizing they don't have the savings to cover that. Almost 50% of Americans claim they do not have $1,000 in savings. Most savings programs for the average American are lying in their 401k plan. So what is happening when we go through an accident or illness situation, the only resource that employee has is the 401k. So in order to get through that crisis, they've just wiped out their retirement plan and put themselves in a much longer term dilemma. So now voluntary products have taken on a prominent role in this strategy. So even if costs are going up to the consumer, the value that they're receiving for this cost can go up dramatically. And if they're educated by their broker or by a trusted advisor on how to position these products, they can also take on strategies to contain that cost of the health insurance component by adding voluntary products and making that a big part of their strategy. So this opens up a tremendous opportunity for the broker and the trusted advisor. And how's that change our industry? Well, since 2011, the influence of brokers in the decision-making progress, or companies looking to a broker to help them make that decision, has grown from 56% of businesses to 64%, as found in the most recent survey. So 2014 really is the year of the broker. Those that are staying in and surviving through this transition period will thrive for the next 10 years. But it is really the year for voluntary benefits. And we kind of have to smash the old concepts and standards of voluntary benefits. As I said earlier, you'd be hard-pressed to find articles about our core products of critical illness, cancer, accident, and hospital indemnity. Traditionally, the voluntary product offered was dental, vision in some cases, life insurance, and other types of insurance, which are all vital. But they really don't play as big a role in the strategy as the core voluntary components. When laying out a strategy, if people realize that they're going to have a choice on how to structure their benefits and their concern is first dollar cost, helping them understand what a voluntary benefit can do can often alter their decision in the core, and it's almost reverse the roles. Not that the one is more important than the other, but in the past they would look at their health insurance options, choose one, and then they would try to address gaps with voluntary products. In the new wave, you can look at what voluntary products can do for first dollar costs and mitigate risk against a serious accident or illness. Having that foundation in place, now we can make a more educated decision on which healthcare option we choose. Whether we want to take on a higher deductible to save overall costs, knowing we have that safety net of the voluntary product in place for first dollar cost if an accident or injury occurs. We also have taken away an uncovered risk with the voluntary product. And I've shared this story with probably every person over 20 years that I've recruited or every broker I've talked to, because it taught me everything I knew about the voluntary business or taught me what I needed to know. And that was an incident I had when I was 1 month into my career with Aflac. I came into the voluntary world from the broker space. I used to think, what does somebody need a cancer insurance plan if you have a good medical plan? And why would I want to sell these little policies that are, less than $10 a week? When a representative from Aflac finally sat down and walked me through the process, I understood the value. I then understood the opportunity in the distribution of these products. But a month after I was in the business, I ran into my first claim situation. It was a friend of my mother-in-law's. She had a 16-year-old son that was diagnosed with Hodgkin's disease. She was a single mother, took him to St. Jude for treatment. She was a nurse in a local hospital that had a tremendous medical plan. That health insurance plan ended up covering over 95% of her doctor expenses, so it was great insurance. What it didn't pay was mostly waived. She took her son to St. Jude for treatment, and part of St. Jude's mission was to help people that maybe sometimes couldn't afford that type of treatment to get care. And since she was a single mother with a limited income, most of those bills were taken care of. So on the medical side, she was very well covered and those expenses were taken care of. She knew I had gone to work for Aflac, and she shared with me that her concern was to be with her son while he was going through the treatment. She took 2 months off of work, and she said, I'd rather go bankrupt than not be with my son while he's going through this treatment. She had great disability insurance at work, but it didn't pay anything because she wasn't the one disabled. But yet she had 2 months of car payments, house payments, grocery bills, the travel expense to spend, the hotel time in Memphis as she waited. So all of these other expenses occurred. And even though she had a very comprehensive medical plan, she was out of pocket all this money, but somebody years before I started with the company had sold her a cancer plan. I helped her with her claim, and within a week I had a check for her for $14,000. And I thought, that's why we do what we do. Over 20 years in this business, I've been amazed how many companies and employers, large and small, how many brokers and consultants I've met with that really don't have the perspective of the impact of that type of benefit, whether it's a cancer plan, a critical illness policy, or an accident, and really what it does to the financial well-being of that consumer. Now that's come to light because culturally we're in a different spot than we were 5 years ago. I draw from our experience in Japan, where Aflac's the largest insurance provider and insuring 1 in 4 Japanese people. Culturally, we started in a different place there. We came in with a supplemental plan. The government covered everybody under the same government-provided health care plan. So the average Japanese citizen really had a clear understanding of, if I get sick or hurt, this is what the government takes care of and this is what I'm responsible for. So a supplement culturally was easier to understand and make sense on how it fit in with the medical plan. Over the years, the percentage that's been passed on to the consumer in Japan has gone higher and higher, from 10% to 20% to 30%, as the government realizes that the cost of the health care is growing and can't support and sustain that. So the burden has shifted larger and larger parts to the Japanese citizens. So the cultural understanding of voluntary benefits was much greater to the large companies in Japan than maybe it was here in the United States. But with health care reform, although it is not a national health care plan, it is going down the same path where that shift is there, where the cultural awareness of true out-of-pocket expenses is growing, and therefore the demand for voluntary is bigger than it's ever been. It also becomes a very important part of the strategy that you put forward with your employers as they navigate through this system. So let's look at this from the employee's perspective. 86% of employees believe that they're going to have to pay more, or they're going to shoulder the burden of more of the cost in the future. So that's pretty universally accepted, that the employee is understanding they're going to be responsible for more cost of the care. Only 16% believe that their current benefit package meets the needs of their family. So that gets into both the actual purpose and the structure of the benefit program, as well as the communication and education to the consumer. Many employees don't really understand what they have. 76% want more benefit options. 35% are just somewhat satisfied with their current benefit plan, and 11% are not satisfied at all. Over the past 3 years, the cost to the consumer for health insurance has increased 50% for the out-of-pocket expense for just the premium of the health benefit plans. And again, to relieve some of these financial pressures, there has to be a different approach and different strategy in implementing the benefit programs. With healthcare reform, there's also the option that is being created with the exchanges, the public and private exchanges. With the subsidies that are available and a very difficult process to understand who gets the subsidies, when they will get them, how that will be applied, that's an education piece in itself to be able to walk through, maybe identify funds that are available for families to help them make a good decision. And if that subsidy is available, now we can make a better decision on the health insurance option and free up dollars to cover the other exposure that's created by the out-of-pocket expense shifted to the employee. We can no longer go with the usual suspects, as I stated earlier, about dental and life and short-term disability and vision. I'm not saying at all that there's not a place for these benefits. They're very important programs to many people. But again, if you look at the true financial impact items, the vast majority of bankruptcies in America today are stemmed from medical issues, not just the cost that's coming from the hospital and doctors, but the overall cost and impact of that family. The stress that's created by this financial pressure feeds into work habits. It feeds into lifestyle habits, lifestyle choices. We know we have a ever-evolving unhealthy population, and as wellness programs become a bigger part of your strategy, we need to realize, okay, if we're going to address the wellness with a wellness program, where are the other areas that are creating stress? And finances always rises to the top of any family's financial or stress levels. So there's different areas also that the voluntary can affect the overall operation of a business. So from the employee's standpoint, what are the financial incentives I have to work for this employer? Over 56% of the employees we surveyed stated that they would be willing to leave their current job for another job that had lower pay but better perceived benefits, which leads to two items. Number one, perceived benefits. If communication to employees isn't strong about what they actually have or what their options are, then it will be perceived that their benefit plan isn't very good. So communication and education and promotion of benefits is critically important for an employer. Secondly, they are going to look at what options they have and what mechanism is in place to help them through that decision-making process. So as they're getting into this new era of self-choice and self-control, they need to have resources that can guide them through their choices and make sure they make the best chance possible. When we surveyed employees, we found that 63% of employees said they see a need for voluntary insurance. 76% of them because of rising medical costs, 66% of them because of rising coverage costs, and 51% because of changes in reform. So they're all interwoven in these percentages, but the majority of American employees today see a need for voluntary products, and most tell us that if there was a voluntary product offered by their employer, they would most likely participate. So we know the demand is high. So what are we talking about when we're talking about voluntary insurance? Again, this is a category that we in our industry have created. It used to be called supplemental benefits, then voluntary, ancillary, and they're all kind of mixed together in the jargon of our industry. The truth of the matter is, voluntary or involuntary, the employee is going to shoulder more of the cost for their overall health care package. So let's look at the components. We have the medical, the major medical, which could take on various options. We see a huge movement of going from a defined benefit plan to a defined contribution, just like we did in retirement plans earlier, where the employer is saying, I want out of the business, here's an amount of money on each month, and now you choose your benefit package and we'll give you a menu. So what does the voluntary component mean? Really, it's called voluntary because in the past, the employer participated in some portion of the cost of the major medical, and all the other products, if they weren't tacked on as a component of the medical, were given to the employee as a choice to pay for it on their own. What do they do, though? They're designed to complement the medical insurance. And I think the mistake that's been made in the past by health brokers is we look through it through the lens of cost of care. Okay, the medical insurance covers X amount of dollars. Here's your deductible, here's your copay, and that's the gap you have to cover. So many times health brokers would analyze voluntary benefits and say, what do these benefits do to address these specific costs? So what I'm providing is a health plan that if somebody goes through an accident or illness, all of these providers will be paid. It never addressed anything beyond that. So how do we maximize the amount that the providers will be paid to keep the employee from getting a bill? What we didn't address was what are all the costs that are created outside the provider's bill? And that's where voluntary benefit plays a huge role. As I stated earlier, I've never met anybody that lost their house or went bankrupt because they had to have a tooth pulled, and yet there's a high demand for dental insurance. When people understand the impact of a major illness or accident and what other costs that can provide, and that there is a product out there that can help them navigate through that system, overwhelmingly they choose to participate in that program. We've found study after study, survey after survey. When we give people the option to buy a voluntary product on their own and they have to do their research, we see very low participation in voluntary insurance. When they're educated, mostly on a face-to-face, or there's a high level of education on what the voluntary product's function is, there's very high participation in voluntary. So it is very much a education-based communication plan that drives the participation and that can really help secure the financial future of the employees. There's all kinds of different policies. There's accident, there's disability, cancer, hospital indemnity, critical illness, many more products out there. They all can play a vital role. But if we look statistically at the major events that can negatively impact a family financially with a devastating effect, a lot of times they circle around a more severe or prolonged illness or hospital stay. Because now we're taking them out of their lifestyle, we're taking them out of their work. I've always found it fascinating when I looked at claims responses from claimants. When in cancer, critical illness, and accident plans, over the years I could stack piles of thank you letters from our policyholders because that check that they received from Aflac when they went through the motorcycle accident or they went through the heart attack was the difference between them keeping the lights on, keeping their house, and even bankruptcy. And it had a major impact on their lives. Interestingly enough, short-term disability, which is a very important product to replace somebody's income, very rarely do you see testimonial on that type of product. And it's a cultural thing, it's a consumer thing. So you think about it, short-term disability rarely is going to replace the entire income of an employee. The average American is living paycheck to paycheck. So they may have a short-term disability benefit. When that benefit is paid, they're getting a fraction of their previous income, yet their expenses have not gone down. So although they appreciate the fact that they had the benefit, and it's there for the exact reason and it's paid for the exact reason they applied for it, there still is a shortfall when the bills come due. And so you don't have that same impact. Although it's an important product, it's an important piece of the financial picture to keep that revenue stream coming to the household, it usually falls short and the employee still finds themselves in a financial hardship. So whether it's good disability or not, it falls short of what they need. So now their income's falling short, yet their expenses have gone up because now they have to pay for things that they normally did on their own. Something as simple as instead of driving, taking a cab to the hospital or having daycare, somebody come in and watch their children while they're going away to get treatment. So there's a lot of expenses that circle around this that some of the voluntary products address specifically. Now it gives us flexibility in other parts of the planning. So we're talking about first dollar costs when something like this happens. Now the household can continue to function and other choices can be made. Now we circle around to the employee's viewpoint of the benefit program. Okay? If I'm going through an incident, I have a voluntary benefit in place. Now I'm communicating one or two messages to my fellow employees. Number one, thank goodness we had that voluntary plan in place because I went through all this, but I got this check and I was able to fund, my child's daycare, pay the bills that I was missing, and my medical insurance did a nice job of taking care of my medical bills. So I'm whole, and now I'm going to return to work. So that is the positive after effect, where the benefits were intended to take place, actually execute and having a positive impact in the workplace, and then having a positive view of the employer that provided them. On the negative side, if they don't understand the benefit program, they don't elect a voluntary coverage, or they aren't offered a voluntary coverage, now that same hardship takes place, and now they're communicating back to the employees at large, boy, I'm really struggling. Our benefit program wasn't very strong, therefore I'm getting collection calls, my credit score is getting hammered, I don't know what I'm going to do. Oftentimes, if it's a serious accident or illness and there's compassion in the workplace, you see employees handling fundraisers and doing different activities to benefit that fellow employee to help them get it through. So the viewpoint, the camaraderie grows in the workplace, but you still now have a viewpoint that our benefit program is insufficient. Meanwhile, the employer is struggling to strike that balance between the cost. We can give them the greatest benefits in the world, but if we're not profitable as a business, we won't have any because we'll be out of business. So we have to balance that for the employer to give that employee the best experience possible. Most employees are going to have a difficult time navigating through their choices, and that's where education is important. 59% of employees told us that they are not comfortable in their own decision-making ability when it comes to choosing the right benefits. Therefore, they're begging for education, and that's where the broker and the vendor partners can help in enrollment and educating the workforce, because if they understand what they're buying, they make good decisions. If they make good decisions and participate, then when that incident happens, you have a much more healthier workforce, and that adds a productivity in the workplace. When we surveyed the best companies in America to work for, and we analyzed specifically their benefit program, overwhelmingly, the companies that offered the best benefit program in the eyes of the employees offered voluntary products as a component. Whether the employee participated or not, the perception was, we have this available, so we have a good benefit program. And that leads to happier, more productive employees. It allows you to attract top talent and maintain your key employees. So let's talk about the value of the true cash benefits, because this is a common misperception among voluntary. We're raised to understand insurance a certain way. So to the non-insurance person, the automatic assumption is that if I have an insurance claim, someone else gets paid. If I have an auto accident, my insurance company pays for the damages and repair of my car or the other person's car. They pay the liability, and they pay everything else, but the money never comes to me. With health insurance, the doctor's paid, the hospital's paid, the provider's paid, but the money never comes to me. With voluntary products, the cash comes to them. It's a real check that they can go put in their bank, and they can decide how that money is going to be allocated. It also addresses the non-standard lifestyle of Americans. And this is a delicate subject, but I'm going to dive into it. With half of our population saying they don't have $1,000 to save, and 27% of workforce saying they don't have $500, the lifestyle of those families is a different financial approach than those that do have the finances. The benefit program can be a key component in how they make decisions in the future. So many times without a voluntary product, not only is there not money to take care of those other expenses and pay the grocery bills and pay the car payment and other things that come along with going through the accident or illness, but the choice is, where do I allocate my dollars? Without the voluntary in place to provide that mechanism, now the decision is, do I pay my medical bill or do I not? If you talk to hospital administrators, hospitals, doctors, one of the greatest stress points of healthcare reform is the number of write-offs, the dollar amount of write-offs that hospitals have to make. The collection process in hospital administration is unbelievable, and it's expanding and growing ever worse. So the choices that are made by the consumer are not, well, the doctor's got to be paid and this is what's going to be paid. It's, should I pay it or not? If I don't have funds over here to cover these, I'm going to make the choice when the dollar comes in my hand to buy food for my family, to pay for shelter, to pay for gas, to pay for the other things first, and then I'll just have to battle with the attorneys and whoever else on these medical bills. If I have voluntary in place and these things are covered, now I can make better decisions on how to manage those medical bills, and I can work with my providers and come up with more payments. So the vicious cycle is mitigated when we provide a voluntary benefit that can take care of this decision, so this could be a better decision. Because ultimately, the reason that healthcare costs are rising dramatically is the percentage of premium that has to be paid to cover all the non-payment of bills on this side. The insurance companies carry that burden. They have to pass it on the people that can't afford the premium. The vicious cycle continues. So voluntary benefits, to me, as a society and culture, are an integral part of the planning, where in the past it's been looked as secondary. So that's where I think it has a profound impact on our industry. And we as brokers have a responsibility to address that piece, because in the end it helps everybody. Most consumers have told us they don't have the ability to save money. Given their current income level and given their history, they realize that they are not disciplined enough to provide that money in a short term. Secondarily, if they're newer to the workforce, they haven't even had the time to accumulate the money. If cancer strikes a family and the bills are $30,000 to $50,000 of extra expenses, they may have only been in the workforce 5 years. There's no way they had the chance to accumulate that with an average job. And yet the burden is here and there's no way to pay it. So now that creates debt, which creates additional interest, which creates additional taxes, which creates a declining credit score, and the vicious cycle continues. So the voluntary benefit role, in my opinion, plays a huge, vital role in how we're going to evolve as healthcare reform takes us into the next generation. And I think it's a heavy responsibility on the broker community. But again, where there is responsibility, that creates the big opportunity, because the revenue that can be generated by properly positioning these products where the average consumer can understand it and afford it gives us great opportunity to put more product in the marketplace. All right. Well, the voluntary advantage is everybody wins with voluntary. The employees win because they have more comprehensive picture coverage and a more control over their personal circumstances. Where one employee is going to have a lot different resources than another, they can position the voluntary products properly to make sure they round out their overall benefit plan in a way that helps them financially when they need it the most. It helps the employer because now we can not only shift costs, but we can manage costs. And in many ways, the voluntary benefit affects costs of other parts of running their business. For instance, administration, work comp claims. Some of these areas can be affected by implementing a benefit program on a voluntary space. Those costs can be lowered because of the impact that voluntary benefit will have. One of the papers we came out with recently in our work comp study is certain employers see a reduction in work comp claims when they offer a voluntary accident policy. I'm going to back this up a little, because accident policies in the past, many times, particularly in larger companies, we look at accidental death and dismemberment policies as accident plans. Okay, that's a small component of the traditional overall accident plan. The overall accident plan pays a cash benefit if somebody gets hurt. There's a lump sum paid if they go into an emergency room. There's a lump sum paid on a schedule for the type of injury. So the person, the claimant receives the money in cash, and it allows them to offset the expenses as they see fit. What we noticed in certain types of employers was now that factor is now entering into another decision. If an employee is hurt off the job, now they have some decisions to make. Number one, now I can't work, perhaps, do I have the money to cover this, or do I have money to cover those medical bills? If I have an accident policy, I'm going to get cash immediately, and I don't even have to give that a second thought. If I don't have an accident plan, now I got to think about what is this going to do to me financially? And the average person is not probably malicious and conniving, but they're going to rationalize why it may have stemmed from an injury that started at work. I did tweak my knee the other day while I was working, and then I rolled my ankle, and it just caused it to go. So it must have been work-related. Over the years, we found in many cases where not only statistically did the third-party administrator of a self-funded work comp plan come to us and say, do you realize our work comp claims have gone down since we implemented this accident plan? So we have statistical proof. But human resources people would tell us, people actually come into our office and say, I have an accident plan and I have work comp. Here's where I got hurt. how should I file my claim? So it's not even people maliciously trying to take advantage or commit fraud by saying an accident happened at work. It didn't. They just really don't understand what work comp does and what it's all about to start with. But when they have a clear differentiator, we found that they will opt to collect on that accident plan, which lowers the mod rate and lowers the claims experience on those work comp claims. So it can have a big financial impact on the work comp side. On a benefit the employees are picking up for a totally different purpose, which is to mitigate the cost if they go through an accident. So they're purchasing the product, they're implementing the plan, and when they have an accident, this situation solves for this one. And we see Monday morning claims reduced, and we see the cost and the containment of work comp claims go down. So that's the type of impact that a voluntary product can have. It is not the primary purpose of the product, nor does it apply to all situations. But in certain industries, it can have a profound effect and be a cost savings item. Administration of this cost. There is an administrative burden to the employer to provide benefits. Okay? Again, as we go to defined contribution, the employer is pushing these off to letting the employees handle it on their own. But there are certain voluntary benefit strategies where the voluntary products or partial commissions generated by voluntary products can actually fund vendor partners that do benefits administration or different types of benefits communication. So the funding comes in the overall revenue generated by the product, but it's still very profitable for the brokers. They implement these plans. So they're using voluntary benefits as a part of the solution and part of payment for the solution, so it reduces the cost and burden to the employer. Now the burden is shifted away from the employer, and they can provide a more robust benefit package at a lower overall cost for the company and reduce costs in other areas, which makes it a very sound strategy and gives you more flexibility to place product. So it is a big win all the way around for the voluntary product. And as I said earlier, I think in general it helps society at large in the United States when we can contain costs, we can contain costs for the consumer, we can shift the burden and put it in a model that the voluntary products were designed for. So actuarially, it's not like the burden's going to shift and all of a sudden voluntary products are going to go out of control. Because of the definition and the way benefits are triggered in voluntary products, they're very simple to make decisions on, they're very simple to execute, and that's why at Aflac we can pay a claim in 4 days or less when somebody has a claim with us. When we talk about the employer's role and we talk about the benefit to the employer, it goes beyond cost containment and cost shifting. Really, at the core of it is recruitment and maintaining your best employee base. 85% of workers right now say that their benefit package is influential on their benefit decision. As I mentioned earlier, many people will choose to leave their job for another job that is perceived to have better benefits, even if it's lower pay, which goes to the very core of the discipline. Most people know they don't have the discipline to save the money, so if they're going to make more money, but they're going to create bigger costs, they just assume somebody else cover the burden. So it is very important to the expansion of a company or the maintenance of a company to keep your best employees, and that's what the voluntary benefit can help you do. 23% of American workers today are enrolled in some type of voluntary product. Again, this is a very exciting statistic because the foundation is set. The products are out there in the marketplace, but 77% of the people in America don't own one, and that creates a huge opportunity for the broker and the agencies that are selling voluntary products as they become part of the more mainstream message and as it is entrenched more in our culture. The opportunity to provide these benefits for employees is greater than it's ever been. And this is why I think you see with the consolidation, the consolidation we're seeing is not just about money and control, it is about seizing that opportunity. These large firms aren't buying smaller firms just so they can have them. They're buying them because the relationships there exist with the employer, and the distribution of voluntary products to these employees where there's a 77% market void is a huge revenue opportunity. That is really the secret behind the money flow in the industry, and those that get it have been very successful. I've seen in visiting agencies and brokers across the country the voluntary strategy or the voluntary piece of their strategy overall becoming more important to the fact that they're even bonusing internally or generating different revenue contests and these type of things to take advantage of not only the revenue stream that the voluntary creates, but really positioning themselves as being the primary trusted advisor. Many firms are made up of property and casualty brokers, health brokers, some financial services, and there's always been a culture of trying to cross-sell in that environment. There's often a question, who's in control? In the past, the property and casualty advisor has primarily dealt with the president and or CFO and money side of the house, and health insurance brokers have primarily dealt with the human resources side of the house. Because of the rising costs and financial decisions that are behind new benefits, that has kind of blended within the company where the financial side of the company is much more involved in the decision of that role. So now the trusted advisor shifts to being the person that offers the best overall solution. So firms that have both sides of the house really can find voluntary benefits can be that bridge that gets both sides of the house together and really entrench yourself with your employer as the overall advisor, and it creates a huge opportunity. Okay, let's explore the impact that voluntary benefits have on workers' job satisfaction. In the comprehensive study that Aflac did with the Aflac Workforce Report, where we sampled brokers, employers, and employees, what we found from the employees that currently 23% of American workers are enrolled in some type of voluntary product. Of those people, they're 18% more likely to be satisfied with their job if they have a voluntary benefit provided. They're 38% more likely to be satisfied with their company's offering of voluntary benefits, and they're 19% less likely to look for another job. That's a huge statistic as we're helping employers manage their workforce, attracting good employees, keeping their best employees, and keeping their best employees from leaving for perceived other benefits. Let's look at the impact of voluntary benefits on the confidence level of employees. And I find these statistics pretty interesting. We talked about the average American, about 49% of Americans not having $1,000 saved. But among those that participate in voluntary products, 64% claim that they also have over $1,000 in place. Of those people that don't participate in a voluntary program, only 49% say they have $1,000 in savings. 52% of the employees surveyed that have voluntary benefits, so that they have peace of mind because of their benefit program, where only 42% say they have peace of mind with their employee benefit program if they don't offer voluntary. 52% agree that health insurance is an important part of their benefit package if they have a voluntary program as well. But only 39% of employees that have a health insurance say that it's an important part of their financial plan. 49% of Americans that have voluntary benefits also say they have some kind of a financial plan for their future, while only 39% say they do if they don't have a voluntary product. And 37% of people are confident about their financial future, which is not a great statement, but of those that participate in voluntary benefits, but only 29% of employees or workers that don't have voluntary are confident about their future. So that goes back to, environment in the workplace, attracting good employees, and having your employer looked at as a great place to work. So it's clear that employees that are offered voluntary or participate in voluntary benefits are more confident in their financial well-being. The majority of employees we surveyed list personal financial issues as the number one non-work related issue distracting them from their job. I thought that was an alarming statistic. Those enrolled in voluntary are 10% more likely to say they have peace of mind in their benefit program. But when we looked at the best-in-class companies, those considered to have the best benefit programs, we found some interesting statistics. The companies perceived to have the best benefit programs actually spend $2,000 a year less per employee on their programs than those that aren't considered to have good benefit programs. And this is clear that the education and communication of those benefit programs has a profound impact. They have 1.8 days less absenteeism per employee per year than those that don't have voluntary benefits in place, and they experience 11% higher productivity. So those perceived as offering the best benefits have higher participation in the work-related activities, they have higher productivity, they have less absenteeism, but in all that, they actually spend $2,000 per person a year less than the rest of the companies. So voluntary benefits or benefit packages don't have to cost more to be better if we understand the strategy behind it. In fact, providing a wide range of benefits doesn't have to cost a dime. If we place the offerings properly, we can find costs in other areas to offset any cost of implementation and give the employee a more robust benefit package. So through the search for better benefits and a better strategy, employers are more and more looking towards their brokers to provide that strategy. In the brokers we surveyed, 27% said uncertainty about health care reform is the number one priority to address with their clients. Nearly 8 out of 10, 79% of brokers somewhat or mostly agree that their clients are not prepared for health care reform. And nearly 1/3 strongly agree with this statement, that their clients still aren't prepared to really address head-on the issues that come up with health care reform, again, which creates a huge opportunity. 93% of the brokers we surveyed, and the health brokers, say they do understand health care reform and are looking for different ways to communicate to their clients and help them get prepared for these changes. Voluntary benefits do matter. In our surveys, we find that 85% of employees said benefits impact the satisfaction of their overall job. 83% claim it is a major factor in the loyalty to their company. 73% say that if they have a good benefit package at work, they would recommend the job to a friend. And 78% has told us benefits were the deciding factor in their choice to leave their employer to go to another one. So in conclusion, employers are looking to take cost-cutting measures in their overall strategy of providing benefits to their employees. Employees are feeling financially unprotected as healthcare costs are shifted to them. Brokers are finding a way to balance the needs of the clients along with the needs of the employees, and the solution can be voluntary benefits. So let's look at what opportunity that creates for the average broker. We have consumer demand, we have the need, we have products available, we have revenue models in place. So we have all the solutions that if you incorporate that voluntary benefit strategy into your firm, you have the chance to seize this market. Now there's 3 ways to be able to go about this. A firm that is not currently active in voluntary benefits or has it a very low priority in their agency can internally train someone in their agency to be that voluntary expert and gear up their agency to be more educated in voluntary, start to explore relationships with carriers and different vendor partners. B, you can go out and hire somebody that already has that knowledge, bring them into your firm, attract them with good benefits, good pay, and bring them into your firm, expand your costs, but expand your opportunity for revenue. Or you can partner with a voluntary provider or carrier. And the partner aspect has been a big impact at Aflac. In our Wingman program, we have our Wingman expanding across the country, where health brokers are partnering with our field force, interviewing experienced Aflac agents and voluntary agents that have knowledge of voluntary products across the industry, not just with our company. And they're brought in-house to be the voluntary go-to person in that agency. So the subject matter expert, if you will, the implementation expert, if you will. And what we found is it's not just about knowledge of product and placement. It's really somebody that understands how to educate the employer in a manner that makes the employer understand the importance of it, and it helps us gain conditions into educating the employees. And that is the number one area that we saw when the health brokers shifted into the voluntary market. We saw the fall off is there was the one extra piece of execution. In the past, when they shopped the major medical, they would go out and look at several providers. They would compare costs, benefits, and help the employer decide which benefit was best for the employees. And then it was a simple enrollment. Here's your health plan. Here's your options A, B, and C. Which do you pick? In voluntary, there's that education of the employer, and then there's the next step, and there's the marketing, the communication, the education, and the fulfillment of the voluntary piece. And that is where having an experienced voluntary person in your agency can pay great dividends, because that is where the profitability is, that is where the impact to the employer is, that is where the impact to the employee is to help them make a good decision, and that's really where your impact as a firm and your firm being looked at as the go-to trusted advisor for that company can have the real impact. So looking at those 3 options as you venture into the voluntary world, Those are the three paths that you have to consider. Again, not everybody has to go into the voluntary business. I'm sure there's specialty, you can see specialty organizations coming into existence all across the board, and looking at it from a tax angle, looking at it from implementation strategies. We can never forget that we're in a relationship business. We make a promise to our clients to be there when they need us. And the bottom line is voluntary products are probably the simplest products in the market. Something happens to a person, we pay a benefit. It's that simple. That's why in the voluntary industry you see claims paid quickly. You see the cash go direct to the consumer. You allow them not only the control over their decision to purchase the product, but the control to manage the benefits as they come in. And that is really the most important aspect of voluntary benefits, and it's something that's unique to voluntary that we don't see in any other aspect, is giving that person a control in their life at a time when they probably need control the most. So I encourage you to work with your clients, work with your employers, talk about voluntary. As you expand your industry, use your resources, use that expertise that's been in the voluntary business for decades, and incorporate that into your strategy moving forward. And I think you'll see a profound impact to your bottom line, the success of your agency, and the impact you have overall on your clients. Thank you for taking the time today.
Thank you for participating in this program. For more information regarding products, programs, services, and other NAIFA member benefits, visit www.naifa.org.